Welcoming in 2019 with some incredible fireworks. Let's talk more about the market. So I was mentioning that the Dow is down so far this year. S&P 7% lower as well. NASDAQ only losing 4.5%, but worst December for the Dow since 1931. In Europe, we have some gains to report in France and Germany. The FTSE 100 in England is down slightly to wrap up 2018. Most of the Asian markets were closed overnight. Only the Hang Seng was open, and it finished higher. Shutdown showdown. The U.S. government is now 9 days into a partial shutdown. Senator Lindsey Graham met with the president yesterday and spoke to reporters with a message for Democrats.
I think the president is telling us what he wants, and he's willing to do some things to get what he wants. And to my Democratic friends, there's some things that you want that can be had if you agree to border security in a reasonable way. The reason we're not talking is because the House Democrats have told us there's no way, no how you're going to get anything you want.
We'll have the latest on the shutdown showdown coming up. Then security alert. A new report out that shows that more apps are sharing your data with Facebook without your permission. We have the latest from there. Plus, going digital, how car dealerships are planning to make the move from the showroom floor to the interweb. Here to break it all down, senior fellow at the National Taxpayers Union, Mattie Duppler, PwC partner Mitch Rochelle, and market strategist at Third Seven Advisors, Michael Block. What do you have to say, Mitch? I haven't heard enough from you.
Happy New Year in Australia. That's what I have to say.
You got to give us more than that. Markets. Because I will argue this: the markets aren't worried, and here we're looking at some photos of the New Year in Sydney. Markets aren't really worried that much about trade. That's kind of a drop in the bucket. The shutdown, a drop in the bucket. Even the geopolitical backdrop, drop in the bucket. It is about interest rates going up way too fast, way too high, quickly. Worries about the Federal Reserve and technology stocks that were overvalued.
Our economy looked great all year. Corporate earnings were great all year. The only thing that was a potential risk was a policy blunder, and it looks like we had the trifecta of policy blunders. We have trade, we have the Fed, and then we have the government shutdown. And what will the next 2 years look like when Republicans and Democrats are potentially stalemated on everything, and or we go the other direction and we start rolling back some of the things that we had rolled back?
Well, as I mentioned in the beginning of the show, normally divided government is a market positive, and what we've seen going into divided government now this year is the exact opposite. So I think a little bit of that is pricing in the good economic policy we had in the first 2 years of Republican rule, but a little bit of that too is the unknown unknowns.
But the market was impervious to so many of these stories, these tweets, and now the market is hanging on tweets right now.
Well, it's because of the interest rate backdrop. That was the change. It was the 10-year yield going to almost 3.25%, and that's really what changed changed the outlook. And now everything matters because people are worried about a bear market and a recession next year.
And Powell's comments in early October were far from neutral, and then, boy, we got a lot closer to neutral in a couple of months.
I will get you in here in a minute. I want to get to Blake Berman. He is at the White House. But coming up, Wisconsin Congressman and House Financial Services Committee Chairman Sean Duffy is here. He's up in a moment. Hilton Capital Management Chief Strategist, bank analyst Dick Beauvais. Don't want to miss any of either one of those gentlemen. Now to your top story this hour. Progress on U.S.-China trade as Washington is reportedly pressing Beijing for more detail. Blake Berman has more for us from the White House.